Reserve Bank of India yesterday released the minutes of the meeting of the Monetary Policy Committee that took place between the 6th to 8th of February. Latha is here to give us key details on what came through. Latha, over to you.
Well, the minutes of the monetary policy were almost as expected. If anything, it reiterated that the Reserve Bank is in no hurry to cut rates. A majority of the members believe that growth is very good. I mean, the growth confidence exudes from especially the governor's comments. But he pointed out, for instance, his words, the last mile of disinflation can be sticky, which means the goal is to go to 4%. We are now at least 1 percentage point away from that, but that last mile can be sticky. He goes on to say we must not assume our job is done. Those were his words. Deputy Governor Patra was even more emphatic. He said inflation actually is the biggest obstacle to growth. So if you want to support growth, you must ensure that inflation is down, because he says high food inflation is killing rural consumption as people are using more money for food. And that's why he wants to persist with the removal of accommodation stands. And Rajiv Ranjan, the other RBI member, says that markets are already exuberant. And if RBI shows even a little softness, it will actually lead to higher asset inflation. So they are not looking like they're going to move anytime soon. The other two external members, Dr. Bide and Goyal. Goyal in particular sounds a little dovish, but both of them said that you have to persist with this monetary policy till you see inflation moving sustainably towards 4%. So that was 5 votes in favor of not changing the policy. It was only J.R. Verma who is very cogently and emphatically arguing that a rate cut is absolutely needed. Not much, he says, 25 basis at least, because if the forecast of inflation for next year is 4.5, then the current rate of 6.5 is 200 basis points higher, which he says is a very high real rate. It is restrictive. So that's the sole voice. But however, you must note that Ashima Goyal makes a very important point. She's pretty unhappy that the Reserve Bank has not aligned the call rate to the repo rate. See, repo rate is not at the rate at which any of us work. The effective rate is the call rate, and RBI has a mandate to keep the repo rate at 6.5, but it has been at 6.75 for the last 6 months. So she is arguing that RBI should bring it down by managing liquidity, which is in any case, now it has moved towards 6.6. What are people taking away from it? Actually, people have pushed out their rate cut expectations. Almost everyone on the street, economists, are expecting it only in October, except for Nomura, which is expecting it a little earlier, I think in August. But basically, everyone is seeing it as an indication that the rate cut expectation should be pushed out to October.
Okay, all right, Latha, thanks a lot for that.